Hey, good morning, everybody. Today is Tuesday, September 8th, 2015. My name is Cliff Backus, and this is your push-button StockTrading.com daily video market review. Markets sold off on light pre-holiday trade on Friday as the summer wound down. Today we should get a little bit more representative market as traders begin to filter back from the Hamptons. For the week, the S&P shed 3.4%, while the NASDAQ composite lost 3%. The market remains volatile, and I would expect that volatility to continue for the foreseeable future. I continue to look for a retest of recent lows, although that expectation would quickly change with a follow-through day. A follow-through day is a day at least 4 trading sessions from the market bottom, which in this case was August 24th. In which one of the major averages increases 1.25% on heavier trading volume than the prior day. Bulls should be cautious. There's no reason for anyone except the most aggressive bulls to be buying stocks until we see a follow-through day. Declining issues bettered advancers by nearly 3-1 on Friday. The New York Stock Exchange advanced decline line remains bearish. New lows continued to better new highs. Our market timing model is on a primary sell signal, but our secondary signal remains aggressive buy. Most traders should continue to maintain stops at their tightest levels, continue to accumulate cash, and perhaps hedge portfolios with contra ETFs. However, our most aggressive traders can begin to selectively buy, keeping in mind that our primary signal is on a sell. The O'Neill market timing model is indicating a market in correction. As noted earlier, the low in this correction was on August 24th, which means that Friday was day 9 of the attempted rally. If we don't undercut the August 24th low, we could see a follow-through day any day now. That being the case, it's important that we keep our watch lists up to date. On a more bullish note, small capitalization stocks outperformed large again on Friday, as they have since the market low of August 24th. Small caps continue to outperform on a 10-day moving average basis, which is more typical of a bull market. Our swing timing model is indicating an oversold condition in the market. Remember, oversold markets can become much more oversold. In this squirrely market, we should continue to err on the side of caution. Again, we're on a primary sell signal, while our secondary signal is aggressive buy. This market's going to continue to be volatile and prone to whipsaw for a while. An aggressive buy signal means only the most aggressive traders should venture back into the market on the long side. Our underlying market timing model is a sell signal for conservative traders. Be careful. Okay. What we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength is in the market on a daily basis, we can get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power is and get out in front of it. So let's see where the strength in the market was last week. Last week we saw consumer products up 15.8%. Industrial maintenance services up 11.7%. Textile and textile products up 2.8%. Other wholesale index is up 2.3%. And finally, non-wood building material index is up 2.2% for the past 5 trading sessions. Not seeing a lot there that we've seen in the past, with the possible exception of wholesalers index. We've been seeing a lot of retail recently in the market, and that may be a good place for us to continue to look for strength in the market going forward. Let's take a look at the NASDAQ composite. The NASDAQ composite on Friday was down 49.58 points, or 1.05%. We closed at 46.83. Trading volume was below the prior day and also below average, as you'd kind of expect on the day before a long holiday weekend. For you followers of William O'Neill, we are on a market in correction. We have been since August 21st. Right now, the market's bracketed by short-term resistance down here in the 48.37 area. We have more significant resistance up here in the 4900 range. We have support down here in the 42.92 area. Our market timing model is showing a sell signal on the market, but our aggressive timing signal is indicating an aggressive buy, meaning that aggressive traders can begin to selectively buy in this market, but most of us should be continuing to maintain stops at their tightest levels. We should be continuing to raise cash in our portfolios and may want to hedge our portfolios with contra ETFs. Let's take a look at what the S&P 500 was up to. The S&P 500 on Friday was down 29.91 points, or just over 1.5%. The S&P closed at 1921. Trading volume was below the prior day and was also below its 50-day moving average. We are in a market in correction on the S&P 500 and have been since August 21st. Right now, the S&P 500 is bracketed by support down here in the 1867 area and minor resistance up here in the 1993 range, more significant resistance up here in the 2044 area. The S&P 500 is on a don't buy signal, and for our most aggressive traders, we are on an aggressive buy signal, indicating that our most aggressive traders can begin to dabble back into this market, keeping their stops very tight and being careful. This is a market that's going to be volatile, it's going to be prone to whipsaws, and we need to be very cautious here. Let's take a look at some stocks that we may be interested in watching, but before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our Universal Watch List, which you can view by going to the pushbuttonstocktrading.com homepage and clicking on blogs, then daily spreadsheet, and then clicking on the link. Depending on the operating system you're running, you may need to click on a dialog box to open the spreadsheet. Once the spreadsheet's open, you simply go down to the Universal Watch List tab, click on the tab, and that will bring up our Universal Watch List. To qualify for our Universal Watch List, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our Universal Watch List. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. As we noted earlier, the market could confirm the uptrend any day now by simply trading up 1.25%, 1.25% on heavier trading volume than the prior day. That being the case, we need to have a little bit of a watch list ready in case the market does confirm the uptrend. And so I want to take a quick look at a few stocks here. And I want to start with Skechers USA. Skechers markets men's and women's and children's casual dress and athletic footwear via department and specialty stores. The stock's in a late stage base here. We're in a fourth stage base with a pivot point of $163.60. Skechers gets a 68% checklist rating. Notice how Skechers has held this 50-day moving average going all the way back. It's respected that 50-day moving average. Right now, we are trading at the 50-day. A bounce off of that 50-day might be a good buy point for very aggressive traders, keeping in mind that the market is on a sell signal and we have not confirmed the uptrend. We also have this trend line in Skechers, which may provide a good entry point for more aggressive traders. And then finally, we have the 163.60 pivot point. Next, we have Builders FirstSource. Builders FirstSource manufactures structural and related building products for the residential and new construction markets in the United States. Builders is working on a second stage base here. We have a pivot point of $15.47. It gets a 72% checklist rating. We have seen a lot of accumulation in builders recently. You have all of this skyscraper volume right here. We have some more skyscraper volume there, and some more heavy volume right in here. I like the accumulation in Builders First Source. I like the fact that it gets a 72% checklist rating in this goofy market. It's only in a second stage base, and it's in a real good area as far as its industry group. Keep in mind our primary signal on the market is sell, but aggressive traders could take a chance on Builders First Source if it broke above the pivot point of 1547. More conservative traders might want to take a chance on it if we get confirmation of the uptrend in the next few days and the stock breaks through its pivot point of 1547 on at least 140% of average daily volume. Next, I want to take a look at Abiomed. Abiomed develops medical devices designed to assist or replace the pumping function of the heart. The stock is in a late stage base here. It's in a third stage base with a pivot point of $110.68. Gets a checklist rating of 68%. Notice how Abiomed, even through the bad market, has continued to respect its 50-day moving average. The stock has this trend line, which may prove to be a good early entry point for aggressive traders. More conservative traders will want to wait for confirmation of the uptrend and buy at the pivot point of $110.68. Anchor Pharmaceuticals develops small particle therapeutics using proprietary boron chemistry platform to treat fungal and other infections. The stock right now is also in a late stage base. It's in a third stage base with a pivot point of $156.93. We get a checklist rating of 68. Notice how Anchor has also respected its 50-day moving average. The reason that I picked a lot of these stocks is because they have respected their 50-day moving average into the face of the recent sell-off that we've had. We have this trend line, which may prove to be a good early entry point for aggressive traders. Otherwise, more conservative traders may want to wait for the confirmation of the uptrend and buy the stock at $156.93 as we break up through that level of resistance. Just a quick note, we've seen a lot of accumulation in Anchor recently. We see these days of above average trading volume with very few spikes in downside volume. That's the type of accumulation that we're looking for when we look for a stock to buy coming out of market and correction. Next, we have Virgin American. Virgin American's a low-cost airline offering premium services with scheduled air travel in the continental United States and Mexico. The stock's a relatively recent IPO. We're working on a first stage base here with a pivot point of $36.70. Virgin gets an 80% checklist rating. Notice how through the sell-off in the market, for the most part, it respected its 50-day moving average. We have a trend line right here, which may prove to be a good early entry for aggressive traders. More conservative traders will want to wait for confirmation of the uptrend and buy on a break through the pivot point of $36.70 on 140% of average daily volume. Notice how back here we had a lot of negative bars, a lot of distribution. But recently, as the stock has begun to work on the right side of this base, we've begun to see more constructive volume patterns. Virgin American, being a first stage base, may be a little bit more attractive to both conservative traders and aggressive traders. Keep in mind that this is a relatively recent IPO, and so it might be a little bit more volatile than a more seasoned stock. And the last stock I want to take a look at for our watch list this week is Installed Building Products. Installed provides new residential insulation installation, say that 3 times fast, services with over 100 locations serving customers in 48 states. The stock is right now in a late stage base. We're in a 4th stage base. We have respected the 50-day moving average. We get a 76% checklist rating, which is a fairly high checklist rating. We have a pivot point of $29.97. A lot of accumulation volume here, which indicates institutional interest in the stock. Installed Building has this trend line, which may prove a good early entry point for aggressive traders. Aggressive traders may also buy a bounce off of the 50-day moving average on at least 140% of average daily volume. More conservative traders will want to wait for confirmation of the uptrend and buy the stock as it breaks through its pivot point of $29.97 on at least 140% of average daily volume. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.